morning everybody, it's Chris here from Serene Education with the 4 majors analysis update for the 16th of May 2012. Hi everybody, going to go over the 4 majors this morning, starting with Euro against US dollar on our daily chart. And wow, have we seen a lot of momentum. And it seems to be pushing further down to the downside. And in my analysis over the past couple of weeks, I've been mentioning that 1265 is definitely a place where we should be looking to take profit or target, as we see Greece becoming more and more an issue and things are slowing down across Eurozone. And sure enough, yesterday's candle in particular, really it was moving slightly higher after some positive news first thing in the morning yesterday. However, as the day went on, more and more negativity started to show, and we saw further downside movement, quite a noticeable push to the downside, and in doing so heading towards that 12,6,500. Why 12,6,500? Well, look where 12,6,500 has and was doing for a number. Is a definite support way back here in August and September of 2010 and January of this year. So psychologically, anybody looking to break below 1300 would have thought long-term target would definitely have to be a previous support and resistance level, and that being the 12,6,500 mark. So clearly targets one now really in favor from 1300 to 1265. This is almost a 450 pip move, guys. So you should be well in profit as I announced this. So looking good. We might see a bit of hesitation going into 1265, but 1265 should be our first port of call target wise. So there's still a bit of room to move here to the downside to 1265, but we could see consolidation. A break below 1265 would definitely signal a further drop, and I think we've seen price bounce in and around the 12,200 mark. So another 100, 2, 3, 400 pips from where we are now to the downside. So there's a lot more to come from this. The more edgy the Greece is, the more uncertainty around Greece. Back to voting apparently. Just nothing seems to be going well for Greece, and more uncertainty unfolds, and the more and more likelihood of Greece actually exiting the euro. So not really looking good at the moment. So downside movement is genuinely on the move, and 1265 would be our first port of call. Could see consolidation in and around this area, as people who initially sold here at the break of 1300 would be looking at 1265 as their first target long term. Could see a slight bounce here before we see negativity still taking hold of the reins and moving us lower towards that 1222 or 12,200 mark further down the line. Sterling, same effects been taking place as Eurozone is taking a bit of a hit. We're starting to see it filter through to the UK market. We have seen the UK sterling, good old cable, really moving to the upside recently. However, that's been capped, and we've seen a pullback, and we're expecting price to pull back to noticeably a prior support and resistance level that came in the shape of this previous swing over here, roughly around the 38.2 mark retracement at the 1200 mark. Saw a bit of hesitation as we went into this area here, a nice little hammer. We thought, well, got to see a nice bullish engulfing above the 32.8, which happened to be the 1262 previous resistance and support over here. What we got was an indecision candle, which didn't really bode well for sentiment wise, and sure enough, we see an indecision candle, we want to see a decision. So it could either be one or two things: that bounce or that bullish candle upside we were looking for, especially after this upside run. That failed materialized because the next candle, our decision candle, came out bearish engulfing. It took us below this 38.2, heading towards a 50% retracement, and in doing so consolidated to the underside of that, and then we saw the sell-off yesterday, really pushing towards 61.8 and below 61.8, and are really moving lower now towards and breaking that 61.8, which happened to me very strong price support and resistance level at the 1600 mark. It was an area that we just broke through recently, 1600. Price failed to actually rally above us for a long period of time, and in doing so it became a noticeable resistance level. Notice through here, through March and April, very reluctantly wanting to go above higher than 1600. Then we got a break, so we're trading back below this again, which is not a good sign. Two parts of our CTC rule are in favor: red arrow, red candle, and we are trading below the 20 and the 50 as we speak. A lot of selling last night on the Asian session, going into the European session this morning, so things not looking absolutely well for this pair as we speak. Upside trend positive, you can see quite clearly here, swing high, and we've had a break of that. I mentioned yesterday in my analysis, we wanted to see a combination of potentially, if we saw selling into this, to find support here at 1600, psychological bounce. As the sell-off continued, it just went straight into it, and this morning we've actually plowed right low. We actually traded 50 pips lower than 1600. We're now trading at 15, just below the 94.8 mark at the moment. So things not looking rosy over here. For this to be a genuine consolidation, we do need to see price today closing above 1600 to see a likelihood of a bounce, and that would take in preference in this long wick here. However, until such time as that unfolds, we should still be looking for bearish sentiment, and as long as price is trading below 1600, then ultimately the bears still are in favor here. So things are not looking too rosy as we head into the remainder of this week. Things are looking very, 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 very negative at the moment now as the news unfolds from Eurozone that things aren't stacking up. We have a lot of news out today. Claremont count change for sterling at 9:30 GMT. We have the unemployment rates. They don't expect an unchanged forecast from the previous figure. We have the Governor Merv King speaking at 10:30 GMT this morning. We have the inflation report, which could be very interesting. Inflation, interest rates 0.5. Inflation is starting to creep up. It'll be interesting to see what Merv King has to say about that and the inflation report. Other than that, we have ECB Draghi speaking this afternoon, 3 p.m. GMT. That could be also really interesting. I guarantee you the word of mouth is going to be, he's going to be talking about Greece and what the IMF and the EU are doing to try and sort out the issues with Greece at the moment. But other than that, it's looking bearish, guys. So as long as price remains below 1600, we should be only looking for shorting opportunities. Don't be looking for buying, only buying at this moment now. Only look for buying once we get a close above 1600. Until then, look for shorting opportunities. Good old Swissy, US dollar, Swiss franc. Let's look. The US dollar has been gaining a lot of strength recently, and I mentioned we should be looking at none other than this area here, around the 960 as our potential target, as price remains positive to the upside. And sure enough, look at this move. Massive move, slight consolidation, and a continuation to the upside. It could be potentially we're going to be looking at 100% here, 955, thereabouts, but moving high nonetheless. CTC in our favor, all the moving averages and prices. This is a beautiful setup for a long trade favor to the long trade upside. 960 definitely is our target. You can see if I just take a February tracement area, you can see trading well above the 23. A lot of support through here over the past couple of months, and as long as I maintain that level, then there was more likelihood of buying power coming positive, and sure enough, that took us higher. You take from the high here recently to the low that we saw in late Feb, early March, you can see that 61.8 prior resistance here clearly been breached over the past couple of days, and sure enough, yesterday finding support above that 93500 and pushing higher. So now the only area we're looking for at the moment now is the 955, 960 mark as we head up towards those prior resistance levels. Break and close higher than that, well, you can see quite clearly we could be looking at potentially first target here 9750, 980, but definitely if we get above that, we're looking pretty for further extensions to the upside for this pair. Institution moving average below price, you can see quite noticeably for a long period of time heading into August of last year. We had a break to the upside in September, a pullback in October of last year, and then we've been trading above the institution moving average. So positive all around for this pair as the US dollar gains a lot of strength against its Swiss franc counterparts. All you should be looking for at the moment now is for opportunities to the upside. Look for potential pullbacks with entries, but overall sentimentally we should be looking at 955, 960 as our overall trend target for this pair going forward. Last pair of the day is the US dollar Japanese yen. Very interesting. I mentioned we needed to see two things after this indecision yesterday, or indecisive week. A lot of spinning tops, dojis, etc. We want to see a positive candle break to confirm, to take out this uneasy feeling over here. For example, this consolidation. There happened to be two things that was required. Because we were trading on a downside trend, swing low, swing low, swing low, swing low, swing low, it dictated that we were seeing downside pressure. And in order to cancel this downside pressure, we wanted to see a break, or wanted to see price convincing that we needed to get above this over here. We are seeing the first part of it. Yesterday we saw a nice bullish engulfing. This candle here yesterday engulfed this entire negative sentiment. We are trading above it. It needs to maintain its momentum higher than 80, guys. If we get a nice bullish engulfing here, then it's definitely telling us that we should be looking for potentially a bounce favoritive for upside long term. Okay, as the US dollar gains strength against the Japanese yen. Okay, a lot of indecision going into this very strong support and resistance level here at 80. If this is a genuine consolidation and this is going to be genuine buying sentiment or possibility for buying opportunity, we do need to see price moving away from 80, and the quicker it does it, the more conviction there is for favor to the upside. If that's the case, then we could be looking to target 81.50 in the next couple of weeks. Because you take the low of this candle here way back in February to the highs, you can see our February tracement areas, and 50 happens to coincide with 80, a very strong support and resistance level. Okay, it's paramount that we get price today over the next couple of days finding support above 80, and if that's the case, then we should be targeting the 38.2 retracement area, roughly around the 8100 as our first target. Get above that, then we should be targeting the 23.6 retracement area, roughly around the 8220 mark as our second target. Get above that, then third target back on for 8400. Other scenario is we get a failed confirmation here, further consolidation in this end. You can see that price just been consolidating in this sideways bandwidth for a number of weeks. We need to get above that or below that. Okay, we don't want to be trading sideways. We're not going to be making any money going sideways. So you just got to box it and say, listen, yeah, you give me a nice bullish or bearish candle, get me out of this indecision range, and I will trade you. Okay, give me a decision candle, and it's looking favor top side. It's got to maintain this upside movement. Give me a nice bullish engulfing, and then I'll definitely be looking at 8100. Otherwise, we could be trading back into this consolidated range. It's happened before. Look here, upside positive, long wick to the upside, and bearishness continues, and we headed back into this range. So you don't want to be suckered into any momentum going sideways. Our CTC strategy tells us we are still looking negative, guys. Yes, we have a blue arrow, but no blue candle and no CTC blue on either side. This is a daily, so got to be patient. Got to be very, very patient. So this is one to really watch. Very indecisive as price is trading sideways. We want to see a decision. Decision at the moment now is trading above 80. We need to see a bullish engulfing getting out of us this range. We are in this range still. We've got to get above this range, and then we'll be looking at 8100, followed by 8220, followed by 8400 long term. Until then, be patient. Okay, keep a hold on it. Be patient. Wait for the correct entry, and then you trade the correct entry. What we do as traders, we want to try and minimize our risk and maximize our profits. And in doing so, we have to be patient at times, exactly like this in the US dollar Japanese yen. Other than that, that's it for my analysis for today. I hope you have a fantastic trading day. For any Brits out there, the weather here in Wales is fantastic, so I presume that the weather in Great Britain is looking fantastic. So enjoy the weather while you can. And all our friends out there across the globe, have a fantastic trading day, and I'll see you first thing tomorrow morning. Until then, trade serenely.